Hey, everybody, Russell Gray, co-host of the Real Estate Guys radio show. And today we're going to have a special conversation with our oil and gas man, Bob Burr from Panther Exploration. Hey, Bob, how you doing?
Fine. How you doing, buddy?
I am excited to talk with you because, as you know, we've just had a big political change, kind of a regime change, if you will. And the Trump administration, as you well know, was very about promoting oil production during his administration. The United States became the world's largest producer of oil, broke its dependence on imports. And now we have a new sheriff in town and some things have been changing. And I just look at the pricing and I can see what's going on reflected in that pricing. And I wanted to talk with you and find out a little bit about, first of all, what's happening and then kind of what you see going forward in terms of oil investment. So why don't you give us a nickel tour from your perspective?
Well, as I told you earlier before the call, I was in the business. I started off in the business in 1973, right in the middle of the oil embargo. I was such a neophyte in the business. I didn't really know the difference, but looking back on it, was rough. Oil came back in '86. Texaco stock went to $3 a share, 250 a share. Another rough time in '98. Boom, boom, boom. Oil is the most sought after commodity in the world. We use it in many, many, many different products. So it's all a bunch of wishing and washing. Trump did the oil business. He did the nation a beautiful job in the fact that he got them where we were the number one producer of oil in the world. And our prices reflected that. Of course, Biden will change that. He cut the pipeline out. He's cutting fracking out. He's doing this. Every time he cuts out a productive factor in the business, he puts us in a stronger position. And here's the difference in where we are and where the shale people are, the big horizontal drillers are. Their lifting cost for their oil is about $30, $28, $35 a barrel. So they have to have $60, $70 oil to make any money. In my business, we get our oil out of the ground about $3 a barrel. So we make big money at $20 a barrel. Now we make a lot more money at 60, but we can make it and survive in it at that price. So Ed Hur, who is a Yale graduate and on my board of advisors, he's a fellow at the University of Houston, a brilliant oil and gas economist. He writes for Forbes, one of their senior writers. And I called Ed and I said, "What do you think?" And he said, "Well, this election just made you $50 million because the price will go up." And I'm just telling you what, Ed, and this is not just some guy on the street. This is a very educated man that knows what he's talking about. So we're extremely happy with the price. A lot of things that are still very positive for us is the service industry is still behind nearly a year, meaning the work that we're getting done in the BR Dome field is based on crisis prices because the drilling and all the other operations haven't come back yet. We're working 3 drilling rigs right now for the price that would cost for us to be working 1. So of course it's based on dollar in, dollar out. You know the economics of deals. So we're in the gunboat as far as getting our work done. So we're on cloud 9. It's a great time to be in the oil and gas business. So,
Nice. Well, let me jump in because there's a couple things. First of all, if people are tuning in for the first time and they're like, what are the real estate guys talking about oil and gas for? I started watching oil and gas kind of as a proxy for what was going on with currency, the way I watch gold, because oil and gas are denominated in dollars, and oil is the number one commodity in the world. So you can see inflation, in other words, the loss of purchasing power reflected in the price of gold. But in the price of oil, I'm sorry, and also in the price of gold. But the other factor that comes in is this supply and demand. It's just like in real estate. So, and the other part of it is that oil and energy costs are built into every single product in the country. So, when oil prices go up, that's upward pressure on pricing. And of course, as landlords, we're concerned about the cost of living for our tenants. And then the other factor that you've got now going on in the oil and gas business is a lot of jobs were lost because of some of the things that have happened. And that has a ripple effect because that's kind of a primary job creator. And then those people get their money from the oil and gas business and they spend it at the local shops or wherever they spend it. And so there's definitely a ripple effect. So we're not here to talk about the employment factor of it. We're really here to talk about the energy factor of it, the oil price factor of it. But what I hear you saying, Bob, is basically during the Trump administration, we increased supply, which drove costs down. All that work created a lot of jobs, and that was kind of the Trump game plan. Biden's come in and he's got a different game plan and he's taken production offline. It has affected jobs and it's caused prices to go up and they've decreased demand, decreased supply. I'm sorry. And then, of course, we are in a bit of a suppressed demand. So, correct me if I'm wrong, but when I look at this, I kind of see the tee up as okay, we've decreased supply and already put upward pressure on pricing. And we're dealing in an economy that isn't fully open yet. If this thing opens up fully, energy consumption goes up. And then you add to that, as we're recording this in, the end of February, 2021, we got this big cold spell going on. And, that's a temporary spike. But I think that, all that being said, your buddy telling you that you've just made a big profit. The key is you can't buy in this market necessarily. You have to already have those means of production. So you guys got in and saw the opportunity when prices were suppressed to step in. Tell me a little bit about how that worked.
Well, the property that we were our first purchase, I had that property in Hong Kong 2.5 years ago, and I was selling 50% of this property for $10 million with a $2 million drilling fund. Some folks we were drilling with down in Texas had it sold. I just told myself, I'll take it over and see what I can do. And I had it sold, and Trump and the Chinese got in a big fight and killed the deal. But anyway, that was the price for half of it. When the Corona hit and the negative prices hit, I knew these guys wanted to sell. Junior was running it, and I won't go into details, but they needed to sell it.
Yeah. So in real estate language, you had a motivated seller. You had a distressed seller, and that's when you step in and you buy because you saw the upside potential. You had the ability to develop the upside potential. They didn't. They wanted out, and you stepped in.
That's right. We bought our reserves for about 8 cents a barrel.
That's insane.
Which is insane. And we have some commitments to do this deal. But if we paid the money out by the month, didn't have to come in any big cash. And in the first 6 months in this field, the first 2.5 being get to know things, seeing where it's laid out. First of all, he had 28 people working. All of them had pickup trucks in this field. We laid them all off, and we brought back 5 people plus my son to do the whole deal. So we cut our overhead by 70%. We're up right now to having income of $300,000 to $350,000 per month, and we've done about 4 or 5% of the work that needs to be done in the field. So we're just scratching the surface. We're up to 350, 400 barrels a day. I believe in the next 3 months we'll be over 1,000. Our goal is 2,000. 2,000 barrels a day will pay us 2 to make 16 million, 6 a month, whatever, 18 million a year. So what we're doing is a note offering, a bond offering, note offering. And I'm proud to say we based it on 10% minimum with an increase as oil goes up in price to up to a max of 18%. First quarter, we paid 10%. Second quarter, we paid 11%. And this quarter, we just paid 12%.
So this is really an opportunity for presuming accredited investors to come in and make a loan through you're offering a bond, and that bond is offering a preferred rate, a guaranteed rate of 10%. Is it guaranteed preferred?
No, it's guaranteed.
Guaranteed 10% annualized return backed by the oil production. And
Backed by
then
the actual asset, the field itself.
exactly. So it's basically a collateralized loan. And
Yep.
and then as the price of oil goes up, which the tee up is totally for that to happen, and of course it
Sure.
has happened, you've got the performance, the payout on that bond indexed to that pricing, and you actually are paying out more, and you have already a track record of having paid out to
Yeah,
investors so far.
that's exactly right. Now, on the note, we also have some features. One feature is they can convert the note at the end of 5 years into equity in the company at preferred rates. This means they get to watch us build it for 5 years. If we haven't done a good job, they get their money back. If they fired up about making the multiples on going public, then they have that opportunity. We have a feature in the notes that for the first year, they can buy a certain amount of shares at 25 cents. Next year's 50 cents. Next year's 75 cents to $1. And a lot of folks exercise all their options. They're in it for 25 cents. Brad Simmons, who is my field head, runs the show. Again, this boy graduated from Yale. He's been in the oil patch for a lot of years. He's been in this field for 35 years. This field. They took this company, this field, and they took it public in Australia back in 2008. And they had a market cap of $600 million. They made their founding partners all 23, 24 times their money. They just hit a huge lick. Now, what happens, Russ, is in the oil business, like any business, we know how to do it. Brad knows how to do it. The people we sell out to don't know how to do it. And they come in, they had 300 million in the bank, debt free. And all of a sudden, all this stuff that we do every day, and it's work. When you're dealing with a bunch of small wells, damn it, it's work out there pulling them and replacing tubing and all this stuff. They don't want to do that. They want to take the money and go down in South Texas and drill those 15,000-foot wells. Well, in about 2 years, they've spent all their money drilling. They've missed about 90% of them, and they've let this field go to hell, so it's not working anymore. Brad's done this 3 times. He comes back in and takes it over and rebuilds it down.
Yeah, let me relate that to real estate investors, because that's our audience.
Yes.
But this is the idea. Ken McElroy is a big time multifamily real estate investor, buys apartment buildings, does some development, but depending on what the market's giving him. But the point is, he goes in and he buys these underperforming properties. Maybe a multifamily investor who really isn't a sound operator bought the property, thought it was just going to spit off cash flow, and they really didn't have to do anything but cash the rent checks. All of a sudden, they find out that it's hard work and it's not working right, and it's not as easy as they thought it was, and they're not dedicated to being a great operator, and they just want out. And Kenny will step in and he'll look at the property and go, hey, we can clean this management up, and we can improve the property, and we can increase the income. The market doesn't have to give us anything. We'll just work off what's there, and then we can create equity, because the more income, the more equity. And that's what he does. And so that's called value add in real estate. You're doing exactly the same thing in oil and gas. Exactly.
Yes.
And then the people who are wanting to get out are going, hey, as great as it is sitting here trying to milk this cash flow from a producing oil well, I want to go hit the gold mine. I want to go drill the big well and get the big, get the big payoff. And so they have a reason for wanting to sell, which is they got a better use for their capital. And rather than fix the problem they've got on this property, they want to go do something a little bit more speculative that has a bigger payoff. And, God bless them. But that creates an opportunity for guys like you that can come in, like Kenny, that are great operators, and say, hey, this thing has a lot of potential here, and we don't have to worry about hitting oil. It's there. All we got to do is put a structure together, raise the capital, and create a payout. And you went with a debt offering, which is a lot more secure for the investor.
It's that simple. It's
yeah.
Really, clearly, you summed it up as well as I've heard it.
Well, it's I've been following it for a long time, and there's a lot of parallels or corollaries between real estate investing and oil and gas investing. And Robert and I on the show talk a lot right now about where we're at in the economic cycle. And it's no secret that residential is a great space to be for real estate, but you better make sure you understand that local economy and where the jobs are coming from for your employee or for your tenants. And if you get that wrong, you have a problem. Whereas with oil and gas or agriculture, a product that can be produced wherever and sold wherever, you don't have to get the the local economy spot on. And I'm not saying you shouldn't do residential if you know what you're doing, but I'm just saying this gives you an opportunity to create some real cash flow on your investment dollars. And all you have to do is get the commodity right. And when I think about the basics, because I believe in the situation we're in right now, in the macroeconomic picture, you better focus on the essentials. You better focus on the fundamentals, right? You better be in food. You better be in energy. You better be in shelter. You better be in healthcare and distribution. Those are kind of the basics. And some of those you have to get the geography right. Some of those you just have to get the commodity right. And when it comes to food and energy, I'm pretty sure I can't imagine a future where people aren't going to need both food and energy. And then it's just a matter of getting the right, buying in at the right time and having the right team. And, what you guys did, as I've watched in the years that I've known you, is, people say, well, how in the world do you buy oil production at 8 cents? When it's selling for minus 40, getting 8 cents is pretty darn good, right? And then you
Yes,
pick
it
it up,
is.
and then you go from 8 cents to now $60 as we're sitting here. People get excited about Bitcoin or what went on in GameStop. That's pretty darn good.
It's unreal. It's unreal.
Yeah. So we just want to make sure people understand that these opportunities are out there, and guys like Bob Burr exist in the world. We travel to a lot of conferences. That's where I met Bob, and we've gotten to know him and his group over the years. Been on the summit with us more than a couple of times, I think, and maybe going to come back again this year, which is going to be exciting. But sometimes you're such an oil guy, I got to kind of translate it into real estate for our real estate investors.
No, that's good. I
But
appreciate that.
but it makes a ton of sense. So, folks, if you're still with us, and I hope you are, and you're listening, you want to understand oil and gas. Bob and his team wrote a great report, very simple, just kind of oil and gas investing 101. So you get your mind around it. You can get that by sending an email to oil and gas, like AND, oil and gas at realestateguysradio.com. And then this particular deal that you did, if you're an accredited investor and you think you'd like to take a look at it, you guys put together a little video and to explain it. So it's really kind of a soft introduction. You're not going to be on the phone with some call center trying to pound you into the deal. That's not Bob's style.
Do that.
Yeah,
we don't do
but
that.
But you send an email to Blue Ridge, like Blue Ridge Mountains, Blue Ridge at realestateguysradio.com. And you can get the video and learn a little bit about it and then hook up with Bob and his team. But it's kind of an exciting time. It doesn't really matter what the politics are. You can agree or disagree with what Joe Biden is doing. You can disagree or agree with what Donald Trump did. But at the end of the day, things have changed. And I felt like doing the session with Bob today was really important to talk about that change and what that change means. And I wasn't quite sure, when we did the pre-interview, and you said, oh, this is great. This is fantastic, because we just constricted demand in an environment, or we just constricted supply in an environment where, just based on suppressed demand, the prices is way up. What in the heck is going to happen when we open up the economy and some serious demand comes out?
Oh, it could be crazy. What we just finished that the listening audience may be very interested in is we have partners, and I cherish our partners. I work very hard for our partners. I treat them the way they should be treated. And it's my job to take all the insecurities away from my partner. Insecurities is lack of knowledge. Okay, I want him to be able to see it. So I just had Brad Simmons and RJ, my son, do a question and answer session regarding the BR Dome for the first 6 months of operations. And I come in at the end. And if the folks would like, we take them from A through Z. I had one of my large hitters call me yesterday, and he said, Bob, he said, man, this is fantastic. We go over every little detail, little rabbit wells, what we're doing, how we're doing it, just give them as much knowledge. And folks, we're very easy people. If you want to look into it, if you have an interest, that's great. There's no force here. We like people to be happy and want to do it. But you have to have or see the materials that support our efforts. And I believe with this tape, it's fantastic.
Well, and Bob, we've got you. We talked about this in our Precious Equity series, where the idea of arbitraging equity. So there's arguably, I don't know if it's a bubble, but real estate equity has been pretty solid and interest rates are really, really low. And if I can borrow money on a property at 3% or 4% and invest it in something with a 10% guaranteed backed by oil production in an environment like this,
Come on, folks. It doesn't get any better.
yeah, you're basically tripling your money. You can actually create positive cash flow on your equity if all you want is cash flow. And or you do what we talk about in precious equity, where you put a portion of it in something like this, and then you break even on the cash flow, and then you take the unencumbered cash and invest in something like precious metals. So there's ways to be short the dollar. Oil and gas is part of that. Gold is part of that. Real estate is part of that. Debt is part of that. And when you look at, they just passed a $1.9 trillion spending bill. There seems to be zero hesitation to print and spend as much currency as they possibly can. And at some point, the dollar is going to reflect it. Gold was up 25% last year in dollar terms, which means the dollar was down 25% in 2020. In terms of silver terms, down 47%. They say there's no inflation. There's gobs of inflation, ladies and gentlemen. The CPI is hiding it. And I have a whole rant I'm going to go off on in a newsletter here pretty soon to talk about really kind of what I think is happening in terms of all of that. But if your investment portfolio is not anticipating a hedge against inflation, I think you're going to find yourself a little flat-footed. And sometimes people say, well, yeah, but gosh, if I'm on the debt side, isn't that negative against inflation? Well, not at 10 and 12 and 18% yields. I mean, especially if you're arbitraging, where you're taking a loan and making a loan. And so anyway, those are semi-advanced strategies. You can check those out when we do those series, but it's really important to get your mind around how these tools work early, so that when you need the tool, you know how they work. So Bob, you do a great job in just educating folks. I really appreciate your down-to-earth style. So ladies and gentlemen, if you're interested in Bob's report, kind of oil and gas investing 101, it's oil and gas at realestateguysradio.com. We'll put the links below in the show notes. And also Blue Ridge at realestateguysradio.com. If you're an accredited investor and you kind of want to find out what this deal that we've been talking about really looks like, as long as there's still room, you can check that out. But, even if you're not interested in investing, I would take a look at it just to get your mind around how these types of things work. Because again, when you look at what's going on in the world, and you look at specifically what's going on in oil and gas, it seems to me, as I look at it, the timing is actually pretty good. And it's something that I think people ought to take a look at.
Yeah, we're very, very fortunate right now in this phase of this time. It's strong.
Well, Bob, really appreciate your time today and great insights. And it's always fun talking to you, my friend. And then we'll hopefully get you on the summit, and we can have long, lengthy conversations over Mai Tais with our toes in the white sand and the beach club in Mahogany Bay, Belize. So it's going to be a ton of fun.
Russ, thank you as usual very much. We appreciate the real estate guys. Y'all been beautiful, and we look forward to a lasting and loving relationship, buddy. Thank you much.
Thank you. Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends. Help them get on board this bus. Help them protect and preserve their wealth to take advantage of what's going on in the world today. All right. Thanks so much, and we'll see you in the next video.